Hello, hello, hello.
But you should know that I've got girl back. It's automatic, surrender. Cause I'm your sister, and always for you. And don't know what I ever do without you. From the beginning to the end, I've always been here for you. I'll hold you like a best friend. One of those days when you say the right thing to keep me moving, to keep me going. What else can I say? Friends are there through thick and thin. Well, I've been told that, and I believe that it's all.
Hey, Chris, how you doing? Can you hear me now? Yeah, let me know if you can hear me, please. Yeah, okay. What about now? Is that better? Okay. We'll get started in a few minutes. A little more. A little more. Oh, wait a minute. I'm turned all the way up, so it just means I need to get closer to the mic then. What about now? That's not too loud? I'm gonna turn the music off in a minute. I'm trying to get signed on to Instagram. Happy Thursday. It's still low. Is that better? Or is that still low? That might be it. Is it better now that I'm talking like right into the mic? Is it better now? Once the music is off? Okay. Yeah, because it's all the way up. That might be too loud then. We'll cut it off in just a minute. All right, guys. How about the sound now? How do I sound now, guys? Is that better? Good? Okay. All right, we're going to go ahead and get started. Hi, guys. If you are new in the room, my name is Sierra, the Wealth Empress. I am your day trading, credit, and funding strategist. And today we are on my YouTube channel, and the link is in the bio for that. And then also, I have posted the link to my YouTube channel in the Discord. So if you haven't signed up for the Discord, the link for the course Discord is also in the bio. So go ahead and join us there. All right. So recap on day one, we talked about leverage. We talked about, if I can remember myself, we talked about what a cross pair is. We talked about Forex, what Forex is. And we did a couple other beginner concepts, okay? Today, we are going to go over the Smart Traders Mini Dictionary, okay? I'm going to read some terms, and then we're going to go to the chart, and we're going to find these terms on the chart, okay? Now, I want to do one page at a time, but for some reason, I can't remember how to do that. Was it layout view? It's still giving me more than one page. Okay, well, we're just gonna do it in view mode. All right. So the first thing in our Smart Traders Dictionary, let me know if y'all can see this or if I need to zoom in a little bit more. Let me zoom in. Oh, okay. Is that better? Is that good? And I will post this tomorrow on TikTok so that you can screenshot it. This is a clip out of my ebook. If you don't know, I do have a Smart Traders ebook. The link is in the bio, okay? But this is a clip out of the ebook. And this is just a quick little dictionary of some things that you'll hear people say, and you may not know what they mean, okay? So the first one is breaker block. All right. A breaker block is a broken order block that becomes a new zone where price often reverses, okay? A breaker block and an inversion fair value gap is similar, the same thing, but they look different, okay? So both of them is an original, what I want to say. I'm trying to find something. I don't have a chart, nothing on the chart. Okay. So a breaker block is an order block that has already been traded through, right? So an order block, a bullish order block, okay, is the last candle before, I'm trying to think. A bullish candle is the last down candle before an up move, okay? So on my chart, my bullish candles are black and my bearish candles are red, right? So a bullish order block is the last down candle, which would be a red candle, before an up move, okay? So this is an order block. This right here, right? So in order for it to become a breaker block, this red one right here, guys, in order for it to become a breaker block, price has to trade through it. So as you can see right here, price came back to the 50% of this order block, and this is how price is supposed to react at an order block. In order for it to become a breaker block, price has to trade through it and then retest it and reject, okay? It's the same as an inversion fair value gap, okay? So a breaker block is an order block that price traded through. Okay. So it didn't respect it. So in this case, price respected it. So this is an order block. Okay. And an order block, a bullish order block, is a down candle before the up move. A bearish order block is an up candle before the down move. Okay. I don't know who TJR is. ICT Concepts. Guys, I'm not going to be answering questions in this first hour unless it has to do with this part. So do you understand what an order block is? Okay. So an order block, a bullish order block, is a down candle before an up move. A bearish order block is an up candle before a down move. In order for it to become a breaker block, price has to trade through it and retest it. And it did it right here. You see, this is a bearish order block. Okay. Price came through it and it retested it. And then it tried to trade higher, but it failed. Okay. Do we have that term before I move on to the next one? Okay, so if y'all don't say anything, then that just means yes. Okay, thank you, Trisha. All right. The next one is confluence. Confluence is when multiple trading signals align at the same price level, increasing the chances of a strong move. Okay. So a confluence is basically when you have all of your steps to verify that your trade is valid, because trading is a probabilities game. Okay. So when you have all of your steps, it's a higher probability that that trade will hit take profit versus stop loss. And I can't really show you confluence because, like I said, confluence is everything together. When we walk through our CRT trades later, then I can define confluence for you on a chart. Okay? So confluence is making sure you have all of your steps. And I can show you the steps. I'm going to screenshot this and send this to the Discord. All right. Come on. All right. So, how many confluences do we need to trade? We will talk about that later, but there's a speculation about the market hitting a wall soon. I don't know. We're doing this part at the moment. So these are my confluences that I use to take a trade, right? So if I have complete yeses across the board, and then this is like after the trade, but this is during the trade. So if I have complete yeses across the board, that's higher probability for my trade, okay? But how many confluences, we will go over that when I go over some of the trades that we took this week, okay? So that's confluences. All right. Displacement. Displacement is a strong, fast movement in price that shows you which side buyers or sellers are. Okay. So let's find this right here. This is an engulfing candle and also a displacement candle. It has very little wicks. Okay. And this is a bearish candle. Remember, my pink is bearish, my black is bluish. My black is bullish. Okay. So this is a displacement candle. It's showing you that the bulls have entered the market, right? So it has very little wicks to the upside. Sometimes it won't have a wick at all. Okay. This one is also a displacement candle. Okay. It's a full body, letting you know who's in control. All right. And then we have a doji candle. Now, there are several dojis, but we're just going to talk about one today. Hey, Fortunist, we're just going to talk about one today. A doji candle is a candlestick with a very steady, meaning the market is indecisive. Okay. So let's find a doji candle. Here's one right here. This one right here. So as you can see, the bulls tried to push it up, and then the bears tried to push it down, and the body ended up just closing in the middle. Thank you. Okay, and here's another one, right? Sometimes you'll see dojis. Here's a bunch of them right here. And sometimes you'll see them like this, right? These are dojis, where there's very little body, okay? And then there's different kinds of dojis, but we'll talk about the different kinds. Entry confirmation. So entry confirmation aligns with confluences, right? You need those confirmations before you enter a trade. Okay. So entry confirmations are clear signs that it's safe to enter a trade, such as liquidity sweep. So that's one of our confirmations that we use. Strong displacement or an engulfing candle. Okay. Engulfing candle. An engulfing candle is a candlestick pattern where a larger candle completely covers the previous candle, signaling a see how little that candle was, and then this one just completely took over. And then I saw another one, this one right here. So you see how this one came above that last wick, right? And it closed down to this side. It completely covered that candle. Okay. That's a good example of an engulfing candle. And engulfing candles create our fair value gap. So you see that from this wick to that wick, it's like a big hole, right? See that? Compared to these two, how this one traded into that one and there's no gap left. So a lot of times our engulfing candles create our fair value gaps for us to enter in the market. Alrighty, and now we have fair value gap, which I just showed you. An imbalance on the chart where price moved so quickly that trading orders were skipped. Price often returns to fill these gaps, and these fair value gaps are my bread and butter. They're my entry, right? So price, the money maker, the market makers came in and they put trillions of dollars on this order, and they put so much money on this in a flimsy gate, and it hits it so hard that it just breaks it, and it just floods all the water in, right? So this is just a lot of money coming into the market, and it's coming into the market so fast that it creates these gaps. And that's what we want to see, so that they let us know where we're going. And then we wait for price to come back to 50% as it did, bam, and trade it lower. That's all we need to see. Well, that's one of our confluences, okay? So this is a fair value gap. All right, now we can go to page 2. Full take profit. A lot of times you'll hear people say TP. TP stands for take profit. It's just where the closing the entire position once your final target is hit. So once TP hits, you'll get on a green line. I will show you, but I'm on my phone on Instagram. So you'll get a green line and it takes you out the trade. You won't have to go in and manually close the trade, okay? Price will take you out the trade and bank your money. What time frame does this work best with? All of them, actually. All of them. So I use my fair value gaps on my higher time frames, and then I go down to my lower time frame to look for the exact same pattern to get a sniper entry. Okay. All right. Liquidity. Clusters of stop loss orders sitting above highs or below lows, acting like magnets for price. This is why when people come in here and ask if I trade support or resistance, I say no, it's liquidity, because they look for equal highs and equal lows on the chart, and equal highs and equal lows is liquidity. It always gets ran, right? So let me show you liquidity. I'm sorry, guys. Oh, excuse me, I'm sorry. Okay. Liquidity, right? So you'll see a little consolidation area where price didn't really move much. Okay. These ones right here aren't exactly equal, but these two are. Sometimes, thank you, Marisol. Sometimes it'll be exactly equal like this, and then sometimes it'll just be consolidation. And as you can see, price came and traded above that, right? So someone was in this, losses all tight. Thank you, Maya. It came back, ran liquidity, and then continued in the way that it was supposed to go. Okay. So liquidity is another one of our liquidity runs is another one of our confluences. Definitely ICT all day. Okay. So once you start to identify liquidity, okay, and then the run on liquidity, your entry is a lot better, right? So we want to wait on liquidity to be ran so that we don't end up becoming liquidity. All right. And then basically liquidity ran is a liquidity sweep. When price purposely moves above a high or low, moves above a high or below a low to grab liquidity before reversing direction. Let me read that again. Liquidity sweep is when price purposely moved liquidity here. Price came down to make people think that price was about to sell, and then it came up, ran that liquidity, and then it went down in the right direction. That is a liquidity sweep. Okay. So this is liquidity, and this is price sweeping it. All right. A lot of times you'll hear run on liquidity. Okay. Or liquidity was ran versus liquidity sweep. Okay. All right. Market structure is the basic framework of the market. Higher highs and lows in an uptrend, lower highs and lows in a downtrend. So in an uptrend, you'll have higher highs and higher lows. In a downtrend, you'll have lower highs and lower lows. And that is market structure. So let's find structure, because this is consolidation. I'm going to go to a 4-hour and let's see if we can get some good looking structure. I want to find a chart with, okay, let's see some. I'm going to delete this. All right. So here we have a downtrend, right? Prices moving down, right? So this would be, I'm not even going to look over here to the left. This would be our high, right? And then price traded down, okay? And then pulled back. This would be our pullback, not this one, because this point came higher than this point, okay? So this would be our full pullback, and this would be our higher low. Does the wicks help to identify if it's actually grabbing liquidity? Okay, let me finish this part and then I'll go back to that liquidity question. Okay, so this is a downtrend. This is our last high. Okay, price came down, gave us a pullback, and because this area is lower than this high, this is now our higher low. Now price broke completely this area. Now this is our lower low because this area is lower than the last low. Okay? And this, all this is higher than this. These are relatively equal. Okay? So this would be equal lows. Okay? Now, if this would have traded up to here, then price, you would want to see if price is going to break structure to go and create another high. But it did it, right? So if I was to draw a line right here, price didn't technically, it ran it, right? So this is another liquidity run. It ran it, but the body closed below this area. So it let me know that so these are equal lows. My sinus is draining. So please forgive me for all the sneezing. Okay, so let me put these together real quick if I can. So do you see how this is moving down and this is moving up? So this is a downtrend. A downtrend makes lower lows and lower highs, and this is an uptrend. An uptrend makes higher highs and higher lows, okay? So if we zoom in over here on the uptrend, this was our last low, okay? Now, technically this point right here because this is our downtrend, right? And now price is going into an uptrend. Hey, mommy. Okay, so this was our last higher low. I'm sorry, lower high that took us down to this lower low. So this is our last structure point that we had. And once this structure point gets broken, then we know that price is reversing in trend. So now we'll be looking for price to higher highs and higher lows. Okay, so price broke structure, and now we have our first higher low. Okay, then we have a higher high and another higher low because it did not come beneath this low. Okay, and this higher low took us to this high. Now this higher high took us to this higher low, but we had the same thing that we had on the other side. Price ran liquidity, but this body didn't close underneath this wick. Okay, it just came back and retested this. Okay, so let me know if you understand higher highs and higher lows. More in depth on break of structure another day. But right now, we just want you to identify the difference between an uptrend and a downtrend. And this is going to be y'all first homework assignment. So if you're not in the Discord, the link is in the bio, because you have to know your right structure points to know where you are in the market. Okay? Because I don't want y'all to think that this right here is a break of structure. Okay? That's not a break of structure. Our break of structure is here because this was our last lower high that took us to our lower low. Okay? And then also, I don't want you to think that this is a structure point, right? This is a part of our pullback. This right here is one move, okay? This goes to that point, okay? And then you can follow this here. But look, you see this area? Let me zoom in. Right here. So this part came up. This is our pullback. Then we got to push up. And if you follow this, right, this looks like this will, but then price decided to come up a little bit more. So all of this is one move. This right here is one push up, okay? And then this gave us our higher low instead of this point, okay? So it looks like this as far as this structure-wise. All right, so this was our low. All right, okay? And then you have here, and then you have here. So when you get a higher low that's lower than the last point, then you just put all of this into one push. So this was just one move, okay? Then you have here, remember? And then you have here, here, here. Again, this point came lower than this point. So now this is just one push up. Okay? I don't like how that looks. Joe, can you bring some tissue, please? All right. And then now you have here, and it's tempting to do this, right? But you see this one is lower and that one is lower. So this is our full retracement. This is why you have to wait on confirmation with these candles. With these candles. Okay? With these candles. Okay? I turned my mic down. Y'all didn't hear that, right? Okay. Now let's continue. So this higher low leads us to this higher high. Okay? And then remember, we got this pushback, and these are equal lows. All right? Now over here, we got this push, right? and you see this pullback, but in order to have a valid higher low, you need a new higher high. So price has to break this area before we can count it as a pullback. So all of this is one push. Well, here, right? Because this is a break of structure, okay? Price has to break that last high in order to get a higher low. All right? So that's one push. And then we got a little mini pullback. All right? And then we got a new high. And I'm going to draw it out for you over here on this downtrend side real quick. All right? So remember, this is our last high, right? This is a higher low. This is a higher high. This is our last higher low. So the very last higher low, right? The higher low that took you to the higher high, that's where you're going to look for your break of structure. Okay? Over here, our lower high that took us to our lower low, that's where we're going to look for our break of structure. All right? So that's where price reverses. I felt like it was right here. Okay. Let me double check. Okay, here we go. All right, so now in our structure points, we have higher low, higher high, lower low, okay? And it's a lower low because it's lower than the higher low. All right? Now, I'm sorry, lower than our lower high. Lower, so it's a lower low because it's lower than our lower high, okay? Now, would you pick this black candle or this red candle as your higher low? Let me know. Would you pick this black candle or this red candle as your higher low? It's a guess. Black candle, okay. So remember, we have this black candle, right? And then price came here and then it came higher. So all of this is just one push, okay? It's just one push. So this is our higher low, okay? Do not use line chart. Use your candlesticks. Do not use your line chart. All right. So now price came to this lower high. I'm sorry, because now we're going into downtrends. And now we have an even lower low. Okay? Lower high. Lower low. Equal highs. All right. We've got a small pullback here. Okay. Lower low. We got another small pullback here. Lower low. All right. And I say don't use your line chart, right? Because we need to see what's going on within the candlesticks, right? You don't have your wicks on the line chart. The line chart only accounts for the bodies, and our wicks count. So ICT says wicks do the damage, but bodies tell the story. Okay? So we need to be able to see our wicks because our wicks are a part of our candles. Okay? So use your candlesticks. Keep your eye on one candle, right? One type of candle, okay? Don't flip back and forth between line charts and these Japanese candlesticks. Everything you do, you want to get used to it being on the Japanese candlesticks, okay? All right, so that is going to be your first homework assignment, mapping out structure. All right. All right, now order blocks. So remember we talked about breaker blocks, and this is in alphabetical order, so that's why the breaker block was there first. But the breaker block is a broken order block that price will come back and retest. Well, your order block is the original, right? An order block is a price zone where big buyers or sellers enter the market, causing a strong move. Okay, so there's bullish order blocks and there's bearish order blocks, and we can come back over here to this area. Okay, I want to find an order block that was valid, because a lot of times that's why I use fair value gaps, because a lot of times don't always work out. Actually, let's go to the 15-minute, because I hear they work better on the 15-minute. Please repeat what I said about the order block. An order block is a price zone where big buyers or sellers enter the market, causing a strong move. Okay? And there's a bullish order block and there's a bearish order block. And I hear that the order blocks work better on the 15-minute time frame. Okay? All right, so this right here, my bearish candles are pink and my bullish candles are black. Okay? So a bearish order block is an up candle before the down move. Okay? So this black candle is my bullish candle, is my up candle before this down move. And what you'll want to see is price trade back into 50% of that candle. All right. And then you'll want to see price push away. Now, this one didn't necessarily hold because price should have created a lower low, right? Or at least came back to equal low for your take profit. Okay. So then in this case, you'll wait for price. I'm sorry, guys. Hold on. Okay. So remember, this was a bearish order block. And when price trades through it, now it is a bullish breaker block. It's trade through that area and then retest it to buy. How many types of blocks? You have two. Well, let's say four. You have a bearish order block. You have a bullish order block. You have a bearish breaker block. And you have a bullish breaker block. Okay? So a bearish order block is the last up move before the down move. It's the last up candle before the down move. Okay? A bullish order block is the last down move. Okay? So it's this pink candle right here. The last down move before an up move. Okay? A bullish breaker block is also the last up move before the down move, but price will break through it. You see this purple line? Price will break through it and then retest it. Okay? And then a bullish order block, a bullish breaker block. Let me make sure I'm saying that right. This is a bullish breaker block. A bearish breaker block is the last up move. Okay? No, let's make sure I find it first. Down move. Here we go. That's an order block. I want a breaker block. All right. How do you set 50%? So I use my rectangle. Okay. You go over here. It's 1, 2, 3, 4, 5, 6 down on your tools. And then you'll find the rectangle. Okay. And then you just put it up on your chart. And then you'll double click it. You'll double click it. And then you'll go to border. And you'll do opacity to 0. And then the only thing you'll have clicked is your middle line, and you can put it whatever color you want, and then make sure opacity is at 100%. Okay. And every now and then when I want to make it longer, I just click extend right or extend left. Okay. I know my phone did not die. Joe, can you get my charger, please? But that's how you do it. And it should automatically just be like, it'll automatically be like that. But you can also just do save as and make it a template. Okay. You said, how does this really work? Somebody else had a question about liquidity. Please don't forget your question after this. We'll go back to it, okay? All right. Let's say this one more time so I can make sure I'm saying it right myself. An order block, a bearish order block. Last up candle before the down move, okay? A bullish order block. Last down candle before the up move. Okay? It's the same two candles, right? So then a bullish candle becomes a bearish breaker block once price trades through it and retest it. Can't even plug it up. That I'm working with to get you guys some better prop firms. It's a new prop firm. Once I pass it and get a payout, then I'll let y'all know about it. Okay. Sorry guys, let's stay on topic. Okay, don't ask about funding or anything outside of the course right now until we go to the chart, so I can make sure I stay on topic. All right, I'm gonna repeat this again. Let me go back over here. I think I have both of them over here. Okay. I want to find one where price respects it. Oh, you know what? Let's go to Nas. Let's go to Nas. I hear the 15-minute does great on Nas. I don't too much. I'm on the 15-minute on Nas. Okay. A bullish order block. Remember, my bearish candles are pink and my bullish candles are black. A bullish order block is the last down candle. Okay. Before the up move. If I mark off 50% of this candle, you want to see price come back to it and respect it and trade up. This one didn't quite give you full 50%, but it came back into the order block and traded up. Now, a bullish order block becomes a bearish breaker block when price trades through it, retests, and rejects. Okay? I'm not a supply and demand trader. All right. Now, a bearish order block. Let's see if we can find one. Hi, Craig. That was respected. Okay, here we go. A bearish order block. Okay, here's a bearish order block. The last up candle before the down move. All right. You'll use your rectangle tool to mark off 50%. And you want to see price trade back to it and reject it. All right. Now a bullish breaker test it and continue higher. All right. Yay, we got it. All right. Does that make sense? How do I mark 50%? I use my rectangle candle. Not my rectangle candle. My rectangle tool. So it's 1, 2, 3, 4, 5, 6 down on the toolbar, right? And you just press that arrow and you find your rectangle. Okay. Double tap it. Double left tap it. You'll go to style. You'll go to border. You'll put your border on 0% opacity. And the only thing you want to have marked is your middle line. Make sure that's on 100%. And then you can pick whatever color you want. Okay? And that's how you mark your 50% for order blocks. While we're talking about order blocks, let's go ahead and let me show you a fair value gap and an inversion fair value gap, okay? Because it works the exact same way. All right? So price is moving in a downtrend right here, right? And you have a gap here, right? So this is a bearish fair value gap. You want to see price come to the 50% and then move lower. Price came back into it. You didn't quite get 50%, but it did trade lower. Now, a bearish order block becomes a bullish inversion fair value gap. Not a bearish order block. A bearish fair value gap becomes a bullish inversion fair value gap when price trades through it and retests it. Okay? You're going to look for the exact same thing on the order block. Price trade through it and retest it. All right? Now price is moving up, right? This is a bullish fair value gap. Price didn't quite come back to the 50%. This one didn't even come back into the zone, so let's use this one. All right, here we go. Price came back to the 50% and it traded higher. Now it becomes an inversion when price comes through it and retest it. Y'all see this one? Y'all see how this is why I like fair value gaps over order blocks, because I think they're more respected, right? So y'all see this made a zone. We had a gap here and a gap here, and y'all see how price came and bounced in between this area for a little while, and how this is just respecting it. These two fair value gaps. Price hasn't left this area. Okay. Hey, from US. And if we draw this one, respected it and traded higher. I think fair value gaps are more respected. I honestly don't even use order blocks, but I added it to the dictionary. All right, you send me a message, we'll check it out later, Craig. Give me 1 second, guys. I turned my mic all the way down. Y'all can't hear me blowing my nose, right? All right, so right now, Nas is currently inside of gap. And see, you don't need much on Nas. I trade it just like that. Don't worry about it. Stop loss goes below the candle that created the gap. All right. So I love fair value gaps more. All right. Now we have, what was that? Order block, partial take profits. Okay. So we talked about take profit earlier. You'll set a take profit when you enter a trade, and price will take you out. You won't have to manually exit the trade. When you do partial take profits, you're taking some of the money off of the table that you have made, right? So if you're up $100, you can take off $10. You can take off $20. You can take off $70 and still leave the trade running, okay? All right. Trading levels. Important price zones such as weekly, daily, 4-hour, and 1-hour highs and lows where big reactions often happen. Okay. And if you're here during my weekly markups, we use trading levels. Okay. And it's called a CRT range. All right. So you can do it on your monthly, your weekly, your daily, your 4 hour, and sometimes on Nas, even the hour time frame. All right. And all it is marking up. All right. All right. And as you can see, Nas gave us a weekly CRT move. Price ran the high and came back to 50%. All right. And trying to see how far to go back. All right, it won't go that far back, but that's how I caught my Nas trade, knowing my trading levels. All right. All right. So this was just a picture of everything, but I felt like it was a little too blurry. So we went ahead and marked everything up on the chart. You got on EU short. I didn't catch EU. I don't have to save that. All right. So that concludes our day 2. All right. Homework is marking up structure. So if you're going to do the homework, join the Discord. I need to make a homework tab and then y'all can drop it in the homework tab. Okay. The person that asked about liquidity, are you still here? Because I want to make sure I answer your question before we move on. You think you got in late? Okay. We can check it out. All right. So it doesn't look like they're here. So, somebody asked if I traded gold. Yes. So I only touch gold when I know for sure. So you'll have to go to the website. So when you click the link that's in my bio, the very first link says Wealth Empress website, and then it's the second link on the website. Okay. The stuff that's on the link tree is just like very quick links for stuff that I think everybody would want. So for the 50% on the fair value gap, you'll always put your stop loss at the low of the candle that created the gap, right? So in this instance, it would seem that price would have taken you out, but this is why sometimes you don't always need to just set a limit. So you see we have this 15-minute markup. When price comes to my 15-minute, then I'll come down to my minute time frame, right? And I will wait for price to get back on top of it. And as you see, it played around a couple of times, okay, after getting back on top. So it originally got back on top here, and this was our low, so you could enter right here, okay? And then if we come over, you'll see that price never came back, all right? And then we'll get into it a little later on how you can get like sniper entries. But right now, that's the best thing. Just wait for price to get back on top of it, or wait for price to reject it, right? So you want to look for your rejection candlesticks like an engulfing candle or a morning or an evening star, okay? All right. You found it, Trisha? All right. You're welcome. Be glad. Okay, so real quick, somebody asked, I don't even see it. I cannot believe I am having drainage like this right now. All right, so I did catch gold. Remember, if you okay, to let me know if price was going to go higher or not. And then we got this gap right here, and I saw it on the hourly, and this was a 50%, and I got in and I took it right here, and I'm just like, I'm out. That's all I need, right? Gold, I don't really trade gold that much, and I didn't really do a big lot size, so I did catch some of that sell on gold. EU. All right, so let's remark up EU. You're welcome. We're going to remark it up. Okay. Yep, remove them because I had a lot going on. So on EU, remember, you guys, if you're new here, I trade ICT concepts with Romeo CRT zones. And remember, the CRT zones was the trading levels that I just showed you. Okay. CRT stands for candle range theory. Buy. No, I never said buy or sell anything. No, it's Thursday night. Tomorrow's Friday. No, we're not getting in any trades. We're done for the week. Okay. We'll get in trades next week, Tuesday. Okay. Mondays don't seem to work out for me too well. I was sitting out of the market on Mondays, and then I was coming and doing these live markups, and my Monday trades have not been working out. So Tuesday, we're done. All right. So candle range, CRT stands for candle range theory. And it's basically that every candle trades back into the previous candle, right? So you see how this candle, right? This would be considered the previous candle, and you see how this candle came back into that one, and then this candle came back into that one, and then this candle came back into that one. Well, the whole concept is you're trying to catch price to run a high or a low of the previous candle and then trade back into it. That's the CRT range. Okay. The only time it doesn't do that, I do not suggest you take trades that anybody calls in this chat. The only time it does not do that is if price creates a gap. So if you see right here, we got a fair value gap. All right. So this week for EU, so this is this week's candle, and this is last week's candle. So we marked our high, our low, and 50% of our gap. Okay? Not our gap, 50% of our range. All right? And then now, as you can see, we have this big fair value gap right here. So we'll also add that level. And price came right to, it's at 50% right now. All right. So most of the time we want to see a high or a low of the range and then price come back into the range. Well, this didn't give us a high, right? And it did break the low, but it continued lower instead of coming back into the range. So when price continues lower or higher outside of the range, you want to look for your nearest fair value gap. And in this case, it was this one, right? So then when you come down to the lower time frame, you want to see price come outside of the range, retest the range, and that retest will be your entry, and then take it to 50% of the gap. Okay? So if we come down to the hour, let's see what price gave us. All right, so it looks like price never gave us a retest. It just completely dropped. Although it did create a gap right here. All right. So right here, you didn't get a retest on the outside of the range. But what we did have Tuesday, let's see, Monday, Sunday. All right. Sunday. All right. So this was the beginning of our week. Okay. Price came back to 50%, which you had a gap right here. Right. And you could have had a small short here. Just take it back to that low. Okay. Then price came up, ran this high. It was saying, I don't really know what's going to happen, right? Then it started to consolidate. So when you see stuff like this is when you come down to a lower time frame. Let's see if we can get some clearer direction. All right. So now you can truly see that consolidation. Price is still moving sideways along this 50%. So it's like it's not really telling us where it wants to go just yet. But what did we get after this consolidation? We got a displacement candle. We got an engulfing candle. And we got a gap. So this was letting you know that price was ready to move to the downside. All right. And then if you miss that entry, then you just patiently wait for other gaps to be created and to get filled. And bam. So we missed this one, right? And price came down. It broke all of these lows over here. It pulled back. It didn't let us in. Broke another low. Pulled back. Finally let us in. And we knew price was coming down here to this fair value gap. So this would have been the only decent entry, the only entry that I would have caught anyways. So you're saying because price rejected at the 50, rejected at the fair value gap, that's your entry. Yep. I always want to see rejection. And now we can come down to the 1 minute, right? Let's come down. And if you see right here, this was our gap. And look what you have on the 1 minute. You have another gap, right? So this is why I like to come down to the lower time frames and get a really good entry. Because 9 times out of 10, you're going to have another gap right on top of that gap. And then your stop loss can be even tighter. Okay. And then on the 1 minute, it also gave more entries that you could stack. Remember, you want to wait for price to get underneath the gap. All right. This was on top of the gap. It gave us a big displacement candle. It gave us a displacement candle, leaving us another gap. Okay. You could have got in at the bottom of this candle, or you could have waited to see if that gap was going to be filled. Gap was filled. No, this is EU. All right. So once you identify your fair value gap on the 1 hour, then come down to the 1 minute, 3 minute, 5 minute, and look for those gaps. Look for your liquidity runs. Look for your engulfing candles, your displacement candles. Okay, and then look for price to wait for price to come underneath the gap. Okay, and then take the trade. And I like for it to come underneath the gap on the lower time frames because then you can get a tighter stop loss. See, like if you wait for price to come underneath the gap on here, then you enter right here, right? Because that was our very first rejection. And then stop loss at the high of the candle that created the gap, right? And then TP at 50%. It's still a 3-to-1, right? But then if you come down here to the 1 minute, this was our original gap, right? A lot of times you'll see this, okay? Price will come on top of the gap, price will trade underneath the gap, and then price will retest it. This is a small retest, okay? Right here. Price come underneath it, price came back and touched it. Price rejected it. This is a pin bar candle. This is a pin bar candle. It's a bearish pin bar. When the body is like this and there's no wicks at the bottom, just a wick at the top, this is letting you know that the bears is taking over. When you have this to the top like this, is letting you know that the bulls is taking over. But you want to look for these candles or these candlestick patterns at a zone. So this wasn't at a zone. It's just a random bullish, well, not really random, right? It's a bullish pin bar. Is letting you know that this up move isn't done yet, right? But we had this pin bar here and then this pin bar underneath it. Middle of the gap, 50%. Okay. Again, I use my rectangle, right? Double click it. The border is at 0% opacity. The only thing I want to see is my middle line. Make sure that's at 100% and choose whatever color you want. A zone is your fair value gaps and your order blocks, 50%. That's a zone. A zone is your CRT range, your high, your low, and 50% of a candle. Okay? Odd NZD. Odd NZD might be that one pair that I don't mark up. Oh, no, it's here. Okay, I'm like, that might be that one pair. So odd NZD jacked me today, but this is why I trail my stop loss, right? It came underneath my trend line and it gave me a beautiful gap, right? But it came down here to this order block and turned around. So I was looking for price to come to my 50 because this one, well, this one actually played out early in the week, right? So if it goes on top of the gap, yep, if it goes on top of the gap and retest it, right? So this was our gap. Price rejected it. It came lower, but it did not come to my equal lows I wanted it to. And now it broke the gap, okay? And it pulled back into this gap right here. All right, and then went higher. A lot of times it will come back and completely touch it. But since we had another gap right here that closed on top of that one, then you can use that. All right. Okay, so this was a CRT move. Price came outside of the range, and then price came back up, retested the range, and dropped to the 50%, right? So I missed that entry because I was looking on the hourly for a gap. And I did have a little gap, little baby gap. But a lot of times, sometimes, not a lot of times, sometimes price will just retest the zone instead of the gap, okay? So then I got my break of structure here, and then I was waiting for price to come back into this gap, and it came back into the gap, right? And then it came short. It didn't even actually touch the order block, but I see right here, now that I'm looking, we had a gap right here, okay? Price traded underneath it, right? But it couldn't hold. And again, if you look right here a little closer, price traded underneath it, it came on top of it, it retested, and it went higher. Okay? You hate your trade stop out today wasn't enough. I mean, stop losses happen. This is why I like my fair value gaps, because my stop loss isn't going to be that much, right? So from here to here, that was 6 pips. It's cool, right? But then a lot of times, also, you don't want to watch the trade, but you do want to watch the trade sometimes, right? So if I was really paying attention to the chart, I would have noticed that price came to this fair value gap and retested it, right? But I really wasn't paying attention, so I did get stopped out at that. I'm not sure if I got stopped out or if I moved my stop loss into profit on this one, but I know that it did not go to where I fully wanted it to go, okay? And now it's moving on up. All right. A CRT play that we had this week that actually played out That's not one. All my JPY pairs trades are playing out. And this one actually is a CRT play, so we're going to delete this on GJ. All right. So remember, I marked my weekly high, which is the previous week's candle. Okay. My weekly low. And then 50% of my range. And this one wasn't a CRT play because, oh, that's my monthly. That's why. I'm like, wait a minute. It didn't trade outside of it. Yes, it did. Okay, here we go. Previous candle. High, low, and 50% of my range. And now that I'm marking this up, nope, this was not a CRT because it did not run outside. But having these ranges where whether price runs your high or low or not, having these ranges helps you understand where price is trading at, right? It helps you not to overextend your TPs, okay? And it helps you to focus more on what's happening in the right now, okay? So I had this gap right here at the beginning of our market, right? So price opened Sunday near 50% of last week's range, right? Price pulled down. I was looking for price to pull into this gap. Okay, at 50%. It did not give me a 50% move. All right, and then we had FOMC, which gave me this big bullish move right here. Then price gave me another gap. All right, and I entered here. And then we had another news move, and it came a little bit, but it didn't break our low. All right, and then I was looking for price to come up here, but I pulled this one early. I was looking for it to come up here. I got out right here. All right, and then remember, stop loss at the low. So these ranges, whether price runs your high or your low or not, it helps you to understand where the market is trading at, right? So let's see. I'm not sure if besides Nas, okay, so my Nas chart is back. Besides Nas, I didn't have any CRT plays. And actually, the high wasn't ran on Nas, it was ran on US 30. So US 30 and Nas sometimes correlate. How did I come up with what? CRT? I actually didn't come up with it. An ICT student came up with it. All right. Let's see. This was another trade. I didn't get stopped out of it. I was up. This was one. This one is on my YouTube. I came live for this one. I got stopped out in profit because I moved my stop loss into profit, and then price started moving back up on us. But this was another one that I didn't get full 50% of the zone, right? So sometimes in some markets you just have to trail your stop loss. Taking the weekly low and high, yes. Romeo is Romeo's strategy. He's an ICT student. All right, and sometimes I don't do just the weekly. I like to do the monthly ones. If I see that monthly high and low is ran, oh, it's easy, right? So I think EJ actually did run the monthly. So let's see. Yep, EJ ran the monthly. So let me show y'all this. EJ ran the monthly, and I missed that. I didn't notice that it did. All right, so this was last month. This is our 50%, which it didn't quite hit the 50%, but you got to remember with these JPY pairs, sometimes you have to treat it like Nas, right? Because the yen is so bearish that these JPY pairs are bullish. Hold on, guys. Thank you. You heard me sneeze. I hope y'all not hear me blow my nose. I'm really trying to. I turned the mic down. What strategy do I use? I use ICT concepts with Romeo CRT range. So this one right here is a monthly CRT range, right? Thank you. So I'll either use my monthly or my weekly, depending on if my monthly was ran. But I didn't notice that this monthly was ran, so I was on the weekly this week. But the monthly was ran, right? So then I'll come down to my hourly or lower. Okay. So price came outside of our range. All right. That's step one. You want price to come outside the range. Step two, you want price to break structure, creating a fair value gap. All right. So price broke our structure. It created a fair value gap, but price has not reached our fair value gap. It just completely melted on us. So normally you'll take entry in the fair value gap, right? I took a sell earlier on gold. I'm done. All right, so this one hasn't given us a full monthly CRT yet. So hopefully next week, what we can see is price come back into this gap and then come down to our 50% because it didn't hit our 50%. Price ran this liquidity right here and then it traded back up. So this melt was crazy, right? So hopefully price can come back up in here to this gap. The link to my YouTube is in my bio. And then hopefully we can get a move down to this 50% of that monthly. And that'll be a nice 300 pips. So we're going to wait for sure. I'm definitely going to be looking out to see if we can get this next week. All right. So we don't have the full monthly CRT. It didn't play out yet. So hopefully it does next week. Like I said, I don't think I got any CRT plays this week. Everything was a little wonky. I got most of my TPs this week on Nas just because I knew, like, even this right here, we're still now we are in this trade, right? Because we entered this morning. And I'm probably about to shorten TP to here because I don't want to hold it through tomorrow. I don't even want to look at the charts. I don't like looking at the charts on Friday. Okay. And then all CHF is playing around. All right. So these CHF pairs is doing something to me. But I was looking for these JPY pair buys. So I caught AJ and I caught GJ buys. And then I caught all these on Nas this week. Just because they gave me my confluences. And this is the only thing that I caught on gold, guys. That's the only thing I caught on gold. Looks like price is retesting this trend line and headed up. The only way, because gold is wonky to me, I have to have my confluences, right? So the only way I would take this, right? So we got a break and retest. Price came back to 50% of my weekly. I would have to wait for it to break this high. I would have to. And then give me some type of retest into a gap. Okay. and right here, exact gap. All right. So it'll be this one right here on the 30-minute. I have to see a break of that structure, retest it as gap, and then take it up. Gold. See, I don't see any other gaps at the up here because gold is so bullish. So really, if you get that, I just say trail your stop loss because you could possibly take it back to the high. Okay, that's the only thing I can tell you on gold. It would have to break this area, which would be a break of structure on the hourly. All right. All right, guys. So I don't know. I'm gonna have to go take some medicine. We did our lesson for the day. We went over a couple of charts. Tomorrow is Friday, so tomorrow when market close, we'll be back at 8 to do another lesson, and then we will start our weekly markups for next week because I mark up so many charts. I start on Friday and I mark up some on Friday, Saturday, and Sunday, okay? So any more questions about the charts or any other pairs before we sign off? You're just arriving. I'm sorry. When we get off, I will uh, download it. It kind of takes a minute to download, but I'll download it and upload it to GBP USD. Can I share my charts? I pretty much cleared most. Share my charts. I pretty much cleared most of them. So we bought AJ, we bought GJ, we bought GBP CHF. Uh, see, that was a 2-to-1. This was an 8-to-1, and then I caught a bunch of little scalps on Nas. All right, and I should have held this. I knew I should have held this to that high, but it was near the close, so we're not uploaded uh, a mark up this 50% and see EU reached the 50%. So we'll mark up this week's candle, high, low, and 50%. Now I did catch GU. I don't think I have my what you call it on there. Buy, but wait for price to break structure on that 1 hour and retest that 30-minute gap, or just get on top of it, because sometimes gold won't give you a retest, it'll just go. So wait for price to get on top of that 30-minute gap.